Thank you so much for attending our webinar this afternoon. My name is Sandy Albers. I head up the SPL division here at Insurance Agency Marketing Services. And again, just so greatly appreciate you taking time out on what we believe is with Unity a good opportunity not only to add to your current commission base, however, to help quite a few of your clients out as well. I'm going to go through a couple slides before I hand it over to Ryan Walsman, who is a VP over at Unity, and John Inting, who is not only an expert in the funeral and estate trust products, but he is also one of IAMS's top agents as well. So you'll get a lot of great information. So first off, I wanted to go over the IAMS Business Builders. And so when you refer an agent over to IAMS, you receive a one-time bonus of $50 for that agent if he or she gets contracted. If that one-time, $100 one-time bonus, when your referral, that referral places their first piece of placed business, and then from that moment on, you get an override. That override does not come out of the agent's commission. That comes directly from IAMS. That will continue. There is no time frame on that. So it's a really great opportunity for IAMS to reward you for entrusting us with that referral. We also have very strong back office support. We call it from submission to commission. So what that means is when you submit an application with us, we scrub that application, make sure nothing's missing. We reach out to you and we send that application out that day. We follow that case from the time it's submitted every 3 days until you are paid. We are very aggressive when it comes to our business. We want to make sure that because you work so hard to send it in to us, we work just as hard to make sure that it gets placed and you get paid. We also have great case design assistance. We have forms at your fingertips, and we will be happy to do any life and annuity quotes that you may need. Our IAMS website, great tool. If you're not registered, I suggest you get registered. It's www.iamsinc.com. You can pull forms from here. You can run quotes. There's current industry links and news. You can pull our annuity grid also and see what are the top 5 annuities out there, whether it's a fixed annuity or whether you're looking at a specific rider. This will also allow you to look at our recorded webinars as well. So a great tool to use. Again, if you're not registered for our website, please get registered. If you have questions on that, please let me know. So this is such a big deal. We are so here at IAMS excited, and from what we're hearing, our agents are excited as well. This is our Top Producer Summit, and this is a Mediterranean cruise getaway. We extended the qualification periods because we just feel like it's so important for as many agents and their guests to qualify. The qualification period started December 1st, 2020, goes all the way to June 30th of 2022. You need 4.5 million points to qualify, and you can get that through placing annuity business, life business, single premium life, Medicare, or a combination thereof. You are going to the most unbelievable places from Croatia, Greece, Rome, Venice. What an amazing opportunity to be able to go, again, for you and your guest, all expense paid trip from IAMS for just writing and placing business with us. Of course, we are hip and happening like everyone out there, we hope. So we are on Facebook as well as LinkedIn. Again, we have great information on both of those pages. So, look us up, like us on both, and what a great way to follow us and kind of keep up with what's going on as well. So right now, I'd like to turn it over to Ryan Walsman with Unity Financial. He's going to go over a few things, and then we're going to hand it off to John Inting to really get into the nuts and bolts of both Unity as well as the funeral trust and estate trust trust product. Ryan?
Thanks, Sandy. It's great to be on here, and I appreciate everything that you guys have done. I think we have some great news, exciting news for all the agents out there that are familiar or may not be familiar with this product and how they can fit this in and incorporate it into their business and then help their bottom line as well. So something with Unity. Sandy, there you go. So what we'll cover today, John's going to be our key talker here. I'm just going to do a brief introduction on who Unity is, but John's going to cover the opportunity, the trust, the product, and then how you can present these ideas and tools. It's always good to keep this fresh, even though a lot of us probably have been doing this for many years. It always helps to have a refresher. But why Unity? So financial strength, we're AM best rating of B++. Unity Financial Company has been servicing families really for over 50 years. We were founded in 1964, and then we've been a family-owned and operated business since 2001 by the Hardys LLC. Our current president and CEO is Jay Hardy. He was able last week to be with us. This week he's not, so we won't miss him. But he's easy to reach out to and accessible, and that's something that Unity strives to. Is when you have a question or you need an answer, we're here with direct contact up for management where you can reach out to us. Irrevocable funeral trust and estate trust product is really our bread and butter. We've been doing the funeral trust and estate trust since 2007. We strive to be the Medicaid compliant eligibility insurance company out there for everyone. So we have both products. There's a single pay feature, and then there's also a multi-pay feature, which is a dollar for dollar program. So there's not a cost to insurance. Most of this business, as you all probably know, it's single pay, but every once in a while we may have a client that's looking for coverage but needs an affordable monthly payment, and that's where the dollar for dollar can come into play. We really strive to provide you guys with the support that you need. We're dedicated to this industry and this profession, and especially with this product. So we're not going anywhere with it. As I mentioned, we've been offering this since 2007 and continue to grow each year. So we have a B++ return of equity of 10.1%. So we're financially stable as well. So we're large enough to support you, but then give you that family feel that we know is important. With that, I'll kick this over to John and let him take us through today's slides.
That sounds good. Well, thank you, Ryan. Appreciate you joining us today, and thank you to everybody that took your time out of your business today to sit in on this. We're really excited about Unity. Obviously, we have a long track record of doing irrevocable trust and irrevocable estate plans, and we're just excited to have another partner that the future looks bright with. So that being said, I'm going to talk a little bit about planning. And as we all know, we're in the planning business. That's what we do for our clients. And when we talk about planning, there's always things that might happen. You know, you might have a homeowner's insurance claim, maybe you have a healthcare claim, somebody's getting married and you got a plan for that. And those are all things that might happen, but the one thing that's inevitable is at some point somebody's going to pass away. And if you've been on a webinar before, you've probably heard me tell this story, but you know, there's only two ways to really get the planning done, and that's for the deceased prior to their death to take the time out to get it done, or in my personal situation, it can be left to the survivors afterwards. And that's really one of the valuable lessons I learned from this was back in 2011 on January 21st. I'm the youngest of 5 kids, so I guess I should preface it before I go to that date. My mom and dad divorced when I was 2 years old, so I wasn't really close with my father, but I've always been the entrepreneur of the family. And so when anything comes up, typically I get asked my opinion on it. And on January 21st of 2011, my sister called to tell me that my dad had passed away. And the next day I found myself sitting in a funeral director's office, and the funeral director was asking me questions like, What was my dad's mother's maiden name? What was his highest rank in the military? Who were his pallbearers? What was his favorite flower, his favorite hymn? And I didn't have answers to any of these questions. But what I did realize is that all the plans that we had done for our clients prior to my dad passing away and afterwards, I realized what a great thing that we had done for those families, because they weren't in the position I was in. They had all the answers to those questions, and they had the funds available to take care of those final expenses. So, you know, there's two ways to get it done. And that is on the pre-need side, which you go into a funeral home and you pick out all your stuff you want and you set up a payment arrangement. Or the final expense side is where we come in on the planning side, and that's where we would be using Unity Life to put those funds aside for the inevitable when it comes about. So one of the easiest ways to get the conversation started with the client is to ask them a simple question. If something happened to you yesterday, how would your funeral be paid for today? And then it's key just to be quiet and listen, because the answers they give you will actually help you in the sales process a little bit later down the road. But what we found is most people don't understand the cost of a funeral. And right now, the average cost of a funeral is running about $15,000. We can attest that that is the cost of a traditional funeral, because we have people pass away with these plans, and we always ask them, you know, how much did your funeral cost? And we hear it really anywhere up to $16,000 now for a traditional funeral in non-COVID times, obviously. So when we talk about that to them, you know, we want to look at what's the opportunity for you as an advisor. And that opportunity is actually quite large. In a national survey, 72% of the people thought it was a good idea to do the pre-planning, but 64% had not taken the steps to do so. And Sandy, you can go to the next slide. And your clients aren't any different, because what we realized is, if it's a nice, beautiful day, a husband doesn't usually wake up and look at his wife and say, hey, you know, let's go down to the funeral home and pick out our caskets. And the reason for that is the human mind can only contemplate for about 11 seconds its own demise, and then it just shuts down. So what we found out is that the people want to do the planning. It's just that they're not taking the time to do it or being pushed in that direction. And like I said, we know your clients aren't any different than ours, because the majority of the people, at least the peers that I speak with, we're all in that retirement planning marketplace. So how big is the market? Well, from 2010 until 2025, 80 million people are expected to file for Social Security benefits. That means by 2025, there will be almost twice as many seniors as there were in 2010. So if we think about that for a minute, our prospect base, or the people that we want to talk to about this product, is huge. So if we know it, we learn it, we talk about it, and we implement it, we can have a lot of great successes in the senior market with this product. So how do you get the conversation started with the client? A lot of the times we will ask them, you know, if they have any type of long-term care insurance in place. Now, statistics tell us that 92 to 93% of all people have no protection at all for a long-term care stay. So it's a great starting point, because if they tell you that they don't have any protection in place, then you can talk to them about the cost of care and what will happen to them, how they'll be forced to spend their assets down at the nursing home until they're destitute and they qualify for Medicaid. So if that's the case, and we know that many people who need long-term care are going to have to qualify for Medicaid, this is an opportunity to show them that, hey, we have a way that you can set some money aside, we can get it protected immediately for you, and we can also take care of that inevitable of having the funds available, but also having the information available for the people who are taking care of your funeral, so they don't have to go through what I went through with my father. So how does this all fit together? Basically, we're just using life insurance and we're going to combine it with an irrevocable funeral trust. So we're going to show them how to set the money aside for the inevitable down the road. We're going to talk to them about how putting the money into that irrevocable funeral trust is effectively spending that money down immediately and preventing that money from being a countable asset when they go through the Medicaid qualification process. So the nice thing is when we talk about the trust that we're going to use, Unity Financial's funeral trust will hold the money for the client. And then when that client passes away, the trust will pay that money out to the funeral home for their final expenses. So what it's going to do for us, for today's conversation, I'm going to talk about the single premium because in Inting Financial, that's all we do with our clients. They do have a 1, 3, and 5-year plan that if you do need it, you should certainly take advantage of it. But for time, we'll just talk about the single premium today. So as soon as we put the money into that irrevocable funeral trust, we've essentially spent it down. In other words, Medicaid is not going to look at that asset as a countable asset towards us trying to qualify for Medicaid to pay for our bills. What's going to happen is when that policy is issued, it's going to be irrevocably assigned to the Unity Financial Trust. And I'm going to say something to you on that. When we say irrevocably assigned, it's what it means. And I like to make sure that as an agent or an advisor out there, you understand when you sell this to someone and put it in place, you need to tell them, just like we tell them here, don't call me to borrow against it. Don't call me to tell me you want to cash it in. This is irrevocable. This money is being put aside to pay for your final expenses and to get that money off of your countable sheet towards a Medicaid qualification. We're going to pay a simple growth that's going to be declared annually by the insurance company and credited annually. The funeral home or the mortuary is paid first. And I just had an experience with this week, so I want to share it with you. We had a client that we did a funeral trust for a couple years ago. She put $12,000 in it. Her dad had died right before we did this for her mom, and her mom was going to do a traditional funeral. So what ended up happening is at the end, when her mom was going to pass away, her mom said, I don't want to do a traditional funeral. I want to be cremated. So the cost of the funeral went from $12,000 down to about $5,000. And that $7,000 that was left over had to be paid back to the estate. And the client had a problem with that. So when you're talking to clients about this, you need to ask them, do you plan on being cremated or do you plan on having a traditional funeral? If you're going to do a cremation, maybe we don't put as much into the funeral trust. Maybe we put $5,000 in there. If you're going to do a traditional funeral, I would highly encourage you to fund it to the max, which is going to be the $15,000, because any money that's left over has to be paid back to the estate of the insured. There's no way around that. So we are going to protect that money from the nursing home, from a long-term care facility, from creditors, and any interest that's built up in the policy. The full value of the policy is going to be income tax exempt when it pays out. So how does the trust compare to traditional savings instruments? What we're looking for on this is we're looking for a yes in every column. And as you can see, when we compare it against traditional savings instruments, the only thing that hits a yes in every column is going to be that irrevocable funeral trust. So again, it's doing exactly what we want it to do, and it works well when you can articulate that to the client. So why is a irrevocable funeral trust the better choice than the other savings instruments? Well, we're sure that 100% of that money that goes in is going to be there when you pass away. I don't care if you go into a long-term care facility and you spend every other dime you have, this money is guaranteed to be there to take care of your final expenses. It's portable. If you go here in Columbus, Ohio and prepay your funeral at one of the local funeral homes, and then all of a sudden your kids decide they're going to take a job in Florida and take the grandkids with them, and you want to move down there now. Well, if you've prepaid your funeral here in Columbus, you could have a problem with that. The nice thing about this is because the money's being held with the insurance company, it can be used anywhere. So it's totally portable. We don't have to name a funeral home on the application. It's wherever you decide at that time that you want to have your funeral. And a good example would be the people I just talked about, because the funeral home they were going to use for a traditional funeral is not the same place they used to get the cremation done. So they were able just to take the policy and the funds and go to the place for the cremation with no issues at all. So again, you don't have to pick anything out. It's immediately available, and that's important because a lot of times clients have life insurance policies, annuities, and as you well know, all these things we have to file claim paperwork, we have to get a death certificate. That can take time. This money is going to be immediately available for the funeral home. So how does the trust itself work? In its essence, it's pretty simple. What we're doing is we're putting money into a life insurance policy. And then after that policy's been issued, 30 days after issue, they're going to assign that policy to the Irrevocable Funeral Trust. That money's going to sit in there. It's going to get interest credited annually. And then when the client passes away, that money is going to be paid directly to the funeral provider. Now, the nice thing about this is Unity works directly with the funeral provider, so no death certificate is necessary to get that money from the Unity Trust to the funeral home, which is what makes it nice to know that those funds are going to be there immediately for that person and their family when they need it the most. Again, if we do have any excess funds left over, those funds are going to have to be paid back to the estate. So basically, we have a couple different trusts that we're working with. We have the Irrevocable Funeral Trust, which you can put up to $15,000 in. Now, there are some state limitations. We'll talk about those a little bit later on the slide. We'll show you all the states. But generally, they're considered an exempt asset by Medicaid. In other words, you put the money in there, that money's automatically protected from a Medicaid spend down. Again, they're going to pay the funeral first. If there's any money left over, that's going to come back to the estate of the insured. There's also the Unity Estate Trust. That one has a $60,000 maximum. And Ryan, just to be clear, I think Jay said that has been raised to 100. Is that correct?
That is
With
correct.
Unity?
So
Okay.
yep. So the maximum, I believe, it's not 100, but it's been raised to 85,000. So what we like to see is offer your family the funeral trust for the 15, and then put the remaining up to 100,000 in the rest into the estate trust that they can immediately hand down to a beneficiary after the 5-year look back period.
Perfectly. And we'll get that slide updated too as well. So generally what's going to happen now is the money that's in the estate planning trust is going to have a 5-year look back period. So in other words, they would be able to go back after that asset if you put it in there and the person was in a nursing home and didn't get through the 5-year look back period. But the policy will be assigned to the trust. The difference with this one is we can name a direct beneficiary to the plan. And unlike our previous carrier that we were using for this, you can go in and change the beneficiary if it needs to be changed later down the road, which I think's a nice added touch to that plan. So when I talk about this at the IMES Agent Academies, inevitably I get the question, John, which trust do I use? So let's talk about that for a minute. If we're going to use the funeral expense trust, Sandy, you can go to the next slide. We're going to be talking about using that for crisis planning. So in other words, I have a relationship with an elder law attorney down the street. He may call me and say, hey, we got somebody that wants to get qualified for Medicaid, and we're looking at a May 1st date to get them qualified. Well, that's crisis, right? He's wanting that done and done immediately. I can go over there and get $30,000 off the table for them and put it 15,000 on each spouse into a funeral expense trust. Maybe they have some money. Maybe they're spending through that money because they have a loved one that's in care already, and that they're looking at within 5 years, they're going to be out of money and they may have to apply for Medicaid. What a great opportunity to take that money off the table and get it protected for them. And a lot of times with us, because we do regular, client events like public seminars or office seminars, a lot of times we'll be dealing with perfectly healthy people who are 65 years old. And I'll ask them, have you prepaid your funeral? And if they say no, we'll explain this to them. And a lot of them, they just want to know the money's in there, that their guide is done with all the answers to any questions a funeral director will have, and that money's protected. Now, when you're talking about the estate planning trust, this may be a client that has more money. So maybe Medicaid's a non-issue for them. They're not worried about it. They've got enough money to pay for care. But what they are worried about is in the event something would happen where they had to spend through their assets, that they have some money that's protected that'll go to their children, maybe a charity, maybe a church. And the reason I say this is a lot of times people will leave in their will a bequest to their church. And that's great, and the intentions are awesome. But I got news for you. If you get sick and go into a nursing home and you have to spend all of your assets, that money for the church is probably not there to be given to them through a will. What a great opportunity to point out to people that they can put that money away today. Once we get through that 5-year look back period, even if they had to go into a nursing home and spend every other dime they had, this money's protected. This money will go to whom they want it to go to. And that's the real opportunity, because if you can pick up the funeral trust at 15 and the estate planning trust with another 85, that's a nice $100,000 deal. And that's going to serve the client well and serve you well as the advisor. So let's talk about the product itself. For today's discussion, again, we're just going to talk about the single pay because that's what we focus on here. But you can see the minimum issue is $500. The maximum issue is $15,000. They can do bank draft, check, credit card, however they want to pay for it. The minimum issue is 10 years old. The maximum issue is age 99. And then if we look over at the single pay, you can see the minimum issue is $2,000. Again, that maximum issue has been raised to $85,000. Same way you can get the assets over to Unity, but look at the issue ages, 50 to 90. So be cognitive of that as you're talking about these plans, so you don't put yourself in a corner and actually can't do what you're telling the client you can do. So anyway, as far as the death benefit information, we're basically doing a single premium guaranteed issue product. What the company does is they give a bump up on it. So if we gave them $10,000, we're going to start with $10,050 as a face amount. And then that money will go into the irrevocable trust after it's issued. And then it will receive an annual simple interest rate. And we'll talk about that here in just a little bit. So here's the estate, I guess the little bit is right now. Here's the estate trust growth rates. Age 50 to 75 is 0.5%, 76 to 90 is 0.3. The funeral trust, age 10 to 80, which is really where you'll probably find you write the most, is going to be 25 basis points. And let me say something to you about that, because I'll have a lot of agents say, well, wow, that's not very much interest. This isn't about growing this money. This is about protecting this money, having it put away in the event that your client gets sick, has to go in for care and start spending all their assets, that the money for their final expenses is 100% protected. That's what you need to be stressing with that, because yes, you can get a higher interest rate with your $15,000, but at what expense? The expense would be is if you get sick and go in a nursing home, they're going to make you spend that money down anyway. So did you really make any interest on it? Probably not if you're giving it all back to the nursing home. So you really want to stress that we're in the protection business with this, not in the growth business. So one of the things I love about their plan over at Unity is if you don't like paperwork, it won't get any easier than this for you. It's literally one piece of paper and your state replacement form. And I like to talk about this a minute because when I got in the annuity business back in 1993, I wrote my first annuity on a guy who owned a dry cleaner in Marion, Ohio. And when I went in to write the annuity on him, it was a 3-page application. And the third page was his receipt. So many of you know, if you're in the business today, whether you're writing annuities or life insurance or long-term care, these applications, I just faxed one in this morning, it was 28 pages long. So what Unity's done is they've simplified this for us, and they've made it a very easy process, not only for you as the agent, but how many clients want to sit there and go through an hour's worth of paperwork. You can get this done in about 10 minutes. So as I've been speaking, you see this front page of the application, very, very simple to fill in for the client. If we look at the next slide, what you're going to see is at the bottom of this application is they're going to sign off on it, and you're going to sign off on it as the agent. Now, when you go to the next slide here, Sandy, what's interesting about this is a lot of times, and I'll use the elder law attorney down the street, is it would not be uncommon for him to come to me on March 25th and say, hey, I want to get somebody qualified for Medicaid on April 1st. I want you to put $15,000 into 2 plans for them. Well, remember, what Unity does is once they issue the contract, it's 30 days later before it goes into that irrevocable funeral trust. But if you look on their form here and you look down where it says immediate transfer, they give you the opportunity to waive the 30 days and have that money put immediately at issue into that trust, which again, if we're in crisis planning and the attorney comes to me on the 25th and wants to get it done by the 1st, I can with the utmost confidence tell him that we can get that done for him and the client. So a lot of times we get the question, what does the irrevocable funeral trust cover? Well, my question would be, what doesn't it cover? Because if you look at everything on here, this is every single thing that you're going to deal with when somebody passes away, which goes back to the cost. Remember, we said it was around $15,000. You start adding up all the things for a funeral in here, and we can get to $15,000 pretty quickly. So you can give your clients the utmost confidence that everything they need to pay for a funeral, that money coming out of the trust will take care of it. So let's talk about the individual state limits a little bit. So you can see here that most of the places are going to have a $15,000 limit on the funeral trust. And the reason for that is it's immediately protected, so they don't want you trying to jam $100,000 into it. That's not going to work. This is for final expenses for the funeral. So as you go through there, you'll see that a couple of the states like North Dakota is $6,000. Now, I'm going to give you my opinion on that. If I can only write $6,000 into an irrevocable funeral trust, and I knew the funeral was going to be 15 grand, I'm going to tell that client, look, I can protect 6,000 immediately, but we need to put the other 9 into the estate planning trust. Yes, we have to wait 5 years for that look back period, but we don't know when you're going to pass away, and I can attest to you that time moves very quickly. And that 5-year period will be up before you know it. And now at least we still have enough funds to take care of those final expenses. So how do we present it to a client? I was always taught that, well, first of all, before I go into that, I will say, because I get asked at every IMS agent conference or academy, they always ask me, do you have a lead system? And we have spent thousands and thousands of dollars trying to create one. We just don't get the responses for it for some reason. So what I always recommend to the agents at the Academy is go out and do annual reviews with your clients. If you haven't talked to your clients about this and you've never mentioned it to them, what I would do is I would go into an annual review and I would say, hey, Mr. and Mrs. Jones, would you agree that all the things that we've done together have worked out the way that I promised you? Obviously, you're going to get a yes to that. And then you're going to say to them, there is something that we did not cover that we're covering with every client. And I have a simple question for you. Have you and the missus prepaid your funeral? If they tell you no, then you have a perfect solution. You know why they need to be thinking about it, talking about it, and looking at it. Then you've got to be able to present it to them. So you have to stress those benefits of planning ahead. Show them that it can be used with any funeral home. I like to talk about that for 1 second because I don't care where you're at on this call. If you go into that Google machine and you type in funeral homes, problems with prepaid funerals, you're going to see, you can read articles everywhere about funeral homes that have misappropriated those funds. I'm not saying everybody does it, but those cases are out there. The nice thing with Unity is they're holding the money. We're using an insurance company, and we know if we're using an insurance company that money's going to be there for the client. We can also do 1035 exchanges of existing cash value into the Unity program. Why is that important? Because 99% of your clients do not understand that if they own a life insurance policy that has $10,000 in cash value and has a $12,000 death benefit, when they die, they don't get $22,000. They get the death benefit. So what do they really have as far as life insurance? They've got about $2,000. That other $10,000 is their money sitting in there in cash. Now, if they get sick and have to try to qualify for Medicaid, they're going to make them spend that cash in that existing life insurance policy. How about being the hero for them and explaining to them if they 1035 exchange the money over into the Unity plan, it's now 100% protected and it's going to be there when they need it the most. We kind of have a rule of thumb here at Enting Financial. If we're within 25% of the death benefit, we feel it's a no-brainer to move the money. So if we've got $15,000 in cash value and they've got a $20,000 death benefit, we don't see any problem giving up that $5,000 of death benefit to protect the cash. Now, if they've got $15,000 in cash and their death benefit's $50,000, that's a very big conversation to have with them, and that has to be their choice, because the last thing you want to do is push them to do that. They put it over to Unity, and a month later they die, and now their family's out that money. So again, within 25%, you can feel confident to go ahead and do the move. Anything other than that, you need to really have a heart-to-heart with that client. And then again, we all get paid for closing deals. You're going to give that client that peace of mind of knowing they planned ahead and that those funds are protected from that point forward. So where do we find the money? They already have the money. I am not afraid to say to a client, hey, Mr. and Mrs. Jones, if we really think about it, you're not even buying anything today. You're taking money you currently have that is countable in a Medicaid spend down situation, and we are moving it over to the non-countable side where it's protected in a Medicaid spend down situation, and it will be there when your family needs it the most, and that's when that inevitable happens and you pass away. So the money's there. All you need to do is ask for the money and show them how to take it from their left pocket, move it to their right pocket, and get that protection that they need and that they don't even know they're looking for. So one of the nice things about Unity is once you're licensed through IMES with Unity, they're going to make all these marketing materials available to you through the website. I'm a big proponent of using that funeral trust funding program brochure. I had a big case that I did with a client. They had a bunch of money sitting in a life insurance policy. I actually had to use a funeral trust and an estate planning trust because there was so much money in there. But when I went out to meet with them and I went through the whole process, at the end of it, they were a current client of mine. They'd done a bunch of annuities with me. And I said to them, hey, I think you need to do this and we need to get this money protected because you don't have any long-term care insurance. And she said to me, well, it all sounds good, John, but we don't make a decision when something's presented to us at the first meeting. And I said, yeah, I do understand that. And you know me well enough by now that I don't have a problem with you sleeping on it. But the best time to make a decision is when everything is fresh on your mind. So I'm going to call you at 1 o'clock tomorrow. I'm going to leave you this little brochure. It's written in layman's terms. You and your husband go back over it. And then tomorrow at 1 o'clock, I'm going to call you to get a decision one way or the other. True story, 9 o'clock the next morning, my phone rang in the office. It was her. She said, hey, we slept on it. We got it, read the brochure again in the morning. Let's move forward with the program. And we actually ended up writing the deal on the client. So these brochures, sometimes where they seem minimal, they can actually really serve you well if you're utilizing them properly. So this is something that when my dad died, oh, I wish we would have had this, because literally I didn't know any of this information. I was always taught in the sales process by my mentor to always leave the client, if possible, a task after you've written a deal. It keeps them engaged, it keeps them out of buyer's remorse, and that has served me well through my whole career. And this is no different. This is a planning guide that if I wrote a funeral trust or an estate planning trust on a client, I'm going to leave this with them at the time of application, and this is exactly what I'm going to say to them. Mr. and Mrs. Jones, I need you to take the time out to fill out this document, because when I bring your policy back, we're going to put it with this planning guide. And if I had never met you before, I could take your contract and I could take this planning guide and walk into a funeral director's office and hand it to them and take care of your funeral without ever have met you. Now, you heard the story about my dad earlier. I didn't have that luxury. And so sometimes when I do these agent academies with IMES, I'll get an agent, it was what happened one time, but the agent said to me, hey, John, I don't know how to say this to you, but man, I wish I had the story about your father. And I said, well, that doesn't bother me you would say that, but you do have that story about my father. You just tell them that you have a good friend that's in the same industry and business you're in, and you want to share the story that happened to his dad so that you can prevent that from happening to them. Believe me, it's a powerful story. It's a true story, and you will do them a lot of service by having them complete the planning guide along with the funeral trust. So once you're licensed with Unity through IMES, you're going to be able to go to their website. You're going to be able to order supplies, look up policies, follow claims, print your marketing materials. I had this conversation with Ryan. I think it's a great idea. Get a label, some labels printed out and put them on the back of each brochure. You can use them as leave behinds. Whatever you want to do, they're going to make these available to you because this is a partnership and everybody wants you to succeed in it. So why start today? We showed you the stats. Your clients, they need it. They're thinking about it. They just need that push to get it done. It's a great income opportunity. The trusts are free. I've referenced this elder law attorney. He does actually Medicaid planning, so he'll do an irrevocable trust for all their assets. That starts at $7,500. That's what you write him a check for up front, and it can quickly escalate to 15 grand to get that planning done. I'm not saying that people don't need that planning, but some people don't need that scope of planning right now. So why not be able to do this for them, not have any fees for the trust, show them that the funds are totally portable, give them that peace of mind, and then use an application that literally takes you 10 minutes to complete, and then submit it and watch the commissions pour in after that. So how do you increase your bottom line? You should always have more than one revenue stool in your business, or revenue leg to your stool in your business. I was always taught this. My mentor that brought me this product 14 years ago, he told me if you understand it and implement it, you'll write a bunch of it, and you can actually pay for your office expenses every year just by talking to people about this. And that's held true for us over the years. So what I like to do is just show you, we all got into this business and we love it because we have control of our time. If you're a good time manager, you can literally work this business 10 months a year, take a couple months off to not miss any ball games of your kids or grandkids, or take your vacations, and still make an excellent income while you're doing it. And this product is no different. If you just talk to people, you're out doing your reviews, you do a couple where you pick up $30,000 on a review, you're going to see you're going to make 4 to 5 grand off of that review for doing something you should be doing anyway. So on this next sheet, we're going to show you what the commission schedule looks like. I like to focus on that 66 to 70 bracket. And if you'll allow me just to round that up to a 15% commission from 14.85, you can see if you pick up $30,000, that's a $4,500 commission to you for doing a good job for your client. There's nothing wrong with that. One of the things we've done is this is actually a higher commission schedule for everybody that's already contracted through IMES, and that's who's on the call today. So as long as you get your licensing in with Unity before the end of April, I think that's the date, and I could be wrong, but I know it's close. We're going to give you this higher comp schedule for that, just for taking the initiative to get your licensing done, and Sandy will go over that with you a little bit later on. But anyway, that's what the commission schedule looks like. Unity's got a great fast start program. They're going to give you $200 bonus for issuing 25,000 in your first 30 days. All of your production with Unity is going to count towards the IMES sales conference. I'm going to say something about that, and I say it every time. When I came into this business, I was new like everybody else, and I'm talking about the whole financial planning business. And one of the things my mentor told me was, when you go to these sales conferences, find the top guys, pick their brain, find out what they're doing, take a couple of those ideas and implement them in your business when you get home. That's how I got to where I'm at today. I didn't think of all of it. I was smart enough on the sales conference to seek out those guys who were willing to talk to me, and then implementing some of those. So again, when you're on a sales conference, those guys love to talk about their successes in their business. Please use that as a time to pick their brain and take something home for your own business. So overcoming the challenge, remember it's okay to ask, have you prepaid your funeral? Really simple question. Why the protection? You got to stress those benefits of pre-planning. Use my personal story with my dad, and stop forgetting to ask them. It's every client, every day, every time. It's not that hard. Have you prepaid your funeral? It's a very, very simple question to ask them. If you get the answer and they tell you no, then you want to definitely talk to them about the funeral trust. If they tell you they've already prepaid their funeral, your next question to them should be, do you have any money that you want to make sure goes to a particular beneficiary and have the chance to have it protected from spending it all at the nursing home? And they will tell you inevitably yes or no. And if they tell you yes, you can talk about that estate planning trust with them. So here's some frequently asked questions that we see is, when do I get paid? Their cutoff for Unity is on Fridays at noon. So anything that's been submitted and issued, they're going to process commissions on Monday, and that Tuesday morning, your commission should be in your account. Cash with app, obviously, that's just sending the full amount of money in with the application. And then if you want to check on if your business has been issued, you got 2 ways to do that. Of course, you can go to the Unity website, and then as you know, IMES tracks all of your business, so you can always reach out to your contact in IMES as well. The support services, this is something that's unique. The agents have direct access to all company management, all the way up to Jay, the president, all the way up to Ryan. These guys will take the time to talk with you. It's actually how I got involved with Unity. They were very accepting of my phone calls and my inquisitive questions, and Ryan probably wondered who I was after I pelted them with all those questions, but they acted like I was the only guy they were dealing with that day. And I know that's not the truth. So again, I can't say enough about that for them. They've got great marketing materials. And again, we showed you anything you need to know is accessible online for you. Now, one of the advantages, if you've never taken advantage of this through IMES, is once you're licensed with Unity, I put together a guide for beneficiaries about 6 or 7 years ago, and I want to tell you why we did it. We had a pretty big client that we had about a $500,000 annuity on. She died. Her daughter called me. She said, "Hey, John, I want to let you know that mom passed away." I said, "Wow, we're really sorry to hear that. You guys need to take care of what you need to take care of, but we will need to get together, in a couple weeks and after you've had time to go through everything and talk about the annuity." And she said to me without missing a beat, "Oh, John, don't worry about that. We've already got that handled. We already talked to the guy at the bank, and he told us he'd take care of everything." And we lost a $500,000 going out the door because we didn't have anything put in place to retain it at the company. So I designed this guide for beneficiaries, and we'll talk a little bit about our successes we had with it. We implemented the guide with all of our existing clients. We went out, we collected all new financial data from them, and what we found out was even our clients that we thought told us everything, by going through this new financial organizer with them, we uncovered assets that they hadn't told us about before. Our successes with that over a 6-month period of going out and implementing the guides and following back up with the clients, we wrote about 1.5 million in additional annuity premium, a couple $100,000 in traditional single premium life, and about 150,000 into the funeral trust program. And again, it's not because we're the smartest guys in this business, but practice makes perfect. Once we went out and saw one of them, and I just want to share this quickly, and I don't want to drag this on any longer, but it only happened once and it'll probably never happen again. One of the first ones we put this in with, we asked them if one of the questions on there, "Are you expecting an inheritance?" And she said, "Well, it's funny you asked. We had $250,000 put into our bank account yesterday from my mother's estate." That's a true story. It's never happened since, but it was a great kickoff. So when we started seeing it worked, we just kept doing it. And again, that practice does make perfect. So once you're licensed with IMES, they're going to make this available to you. You can just insert your own company information in there. This is the front of the guide. What's it say at the very top? "For help settling my estate, please call my advisor." I think about that $500,000 case I lost every time I read that statement, but I will tell you a very good story that happened to us towards the end of last year. Wendell Bennett, who's an advisor in my office, he's been my best friend since kindergarten and worked with me since 1988. He said, "Hey, I got a phone call from the beneficiary guide." It was a client of ours that lived in Pennsylvania. He went out to see, we designed a plan. After he went out to see them, he came back, him and I worked on a plan. He went out on his own to the plan and wrote $1 million in assets we collected that day in that appointment because she called us off this beneficiary guide that we had left in there with her dad. That's a true story. And so in the beneficiary guide, and we don't show you all this for the sake of time, but there's everything in there from a welcoming letter from me telling them that we're going to protect them from every possible tax, court cost, and fee that we can. But it also has things in there like writing letters to Social Security. It's already got the letter written, writing it to the credit card company to stop the credit cards. Everything you need to do when someone passes away, it's a complete step-by-step for them to be able to work off of. And then this is the financial organizer that we use. So Sandy, if you go to the next slide, you'll see question 8. And question 8 says, "Have you prepaid your funeral?" If they tell us no, we're not going to launch into a sales pitch. We're excited about collecting the rest of the information, and then we'll circle back with them. If they say, yes, we have prepaid it, then we're going to ask them, do you have any specific money you want to go to specific people, church, or charity that you would like the opportunity to have protected in the event that you go into a long-term care facility and have to spend all of your money. And if they say, well, yeah, we probably need to talk about that. Again, we're not launching into a sales pitch, but we know we've positioned ourselves to come back in with Unity and really do a good job for this client. At the end, there's a little paper for you to write down any notes or anything that you may have with the client. And then Sandy, other than that, I think the next slide is any questions anybody on the call might have.
Yeah, absolutely. And while we are answering questions, I want to make sure that we put out a poll and asking if you'd like to be appointed with Unity. Gosh, if you're concerned that you're going to have to fill out all this additional paperwork, if you've already contracted through SuranceBay, all we have to do is send you a link, and all of that information then is transferred over to IMES. Makes it so easy for you. Otherwise, you can fill it out electronically online through our website. I can send you the paper, whichever you'd like. So I'll leave that up. Click yes if you would like to get contracted, and we'll make that happen. We have several questions saying, for the estate trust, if that is put into an irrevocable trust, how are you able to assign a beneficiary that's not a funeral trust?
Ryan, I'll let you take that one.
Okay. Yeah, so really the way the trust is a little bit different on the estate trust. There's just a slight little bit different terminology where we structured it to be able to pay a beneficiary on it. The real focus with the estate trust, though, is you have to be focused on the 5-year look back. So Medicaid is what is going to go. So the difference between the trust really is the funeral trust is saying we're marking this irrevocable immediately, and they cannot. We're going to pay out the estate of the insured if there's ever any excess funds left over. So Medicaid within that 5-year window says, okay, we're okay with that as long as the family or beneficiary can't have any access to it. Now on the estate trust, you can list the beneficiary, but the key is with that is even if they were after 5 years, if they're applying for Medicaid will no longer look at that particular policy as funds within that 5-year look back frame. So that is cleared to 5 years, which then allows it to go to a beneficiary that the family wishes for. The real key is the 5 years, making sure that your client, whoever's taking that out, doesn't foresee that Medicaid planning in that 5-year window.
And Ryan, if I can just piggyback on that real quick, and I would say that that is the key, because anytime if your client let's say they went in for care and it was in year 3, then they could look back at that asset even though you put it in there. But like Ryan said, once we're clear of that 5 years, that money can never be touched. So the beneficiary, it can have a beneficiary on it. And I'm going to stress this again. It is very important. And one of the things I liked, or actually loved about the Unity program, is life changes. And we can go in and change the beneficiary if need be at some point.
We also have a couple questions on the rating, Ryan, for the company rating or carrier rating. Can you explain, with the rating at a B++, your financial strength is very strong. Can you just go over that again briefly?
Yeah, so financially, we are B++, and we kind of look at it as, years ago, just like we continue to grow, we work with AM Best. We just wrapped up our AM Best review a couple weeks with them ago as well, and everything's still staying stable. We're still growing. We're still going to stay as a stable company with the B++, but we work with them very closely to continue to grow that and take that next step. We kind of look at it as years ago, NGL at one point in time was a B++ company as well, as just an example. So what we do is at Unity, we're very conservative on how we're allocating the funds. So financially, we haven't made that A yet, but still, when you look at the B++, we have the stable outlook. And then if anybody wants some additional information, we do have a financial strength overview that's going to talk a lot more in depth about those, the crediting rates, how we invest, and where those investments are.
So we don't have any further questions. Again, Ryan and John, thank you so much for your knowledge, as well as just being accessible to answer everyone's questions and being on this webinar. To all the attendees, thank you so much. We would not be as I'm presenting this if we didn't think that Unity would make a difference for you as the agent as well as your client. So I will be contacting everyone who has attended. This is recorded, so everyone will receive a recorded copy of this webinar. Of course, you can call me at 1-800-255-5055 to ask any questions. Again, my name is Sandy Albers. I head up the SPL division at IMES, and I will be more than happy to address any questions or needs that you may have. So everyone, I hope that you have a safe and healthy, happy weekend, and look forward to speaking with all of you again. Thank you.
Wasn't that good?